Good morning, everyone. I'm Steve Ankerstar, and welcome to the Ankerstar Wealth Morning Show. Today, we're going to be talking about 3.8% CDs that are now available. They have not been nearly that high for a long time. I will show you those. Secondly, we're talking about the U.S. is officially in a recession. Okay, I have to say unofficially because somebody has to declare it a recession, but we certainly hit our second indicator of two consecutive negative GDP quarters, which was reported this morning. And lastly, we'll talk about the 75 basis point rate hike from the Fed yesterday and Chairman Powell's comments, which led to the huge bump up in the market. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Now let's get started. So let's talk about these CDs, you say. CDs haven't paid anything for a long time. So the screenshot that you see here is directly from the Schwab Advisor Center website, which is what I'm in every day, all day, right? Managing portfolios. So I wanted to show you yesterday, it was 3.75 was the highest I could get. And I was actually starting to put these in client portfolios for folks that are conservative, looking for guaranteed income. And we just haven't had that. And now you see there's a 3.8 CD in there this morning. I'd imagine that'll be gone by the time anybody would say, hey, buy that for me. So I would, cage yourself to thinking more 3.7 or so, but we shall see. So a couple things, as far as the conservative accounts out there, like Steve, if you can make 3% for me, I'll be happy with no risk of losing money. Well, that used to be municipal bonds, right? That has not worked. Municipal bonds sold off almost 10% this year with the rising interest rate environment. And that's heinous, right? So this is where you need to be now if you have short-term money and just you want a little bit upside without risk of the downside. Now, how can Schwab find these CDs when you call your bank and you can't get them? Well, that's the power of size, if you will, because they can surf the entire United States and buy these bonds in mass. So they can buy a $10 million. I said bonds, I meant CDs. They can buy $10 million of these, break them up into tranches, if you will, and then you can hop in and just buy a piece of it. That's the power of the big bank at work for you. And, the better part about these, a lot of people are like, okay, when you think CDs, what's the maturity? Is it, 3 months, 6 months, 1 year, 3 year, 5 year, 10 year? Well, you can look here at the time to maturity in these. So this 3.8 CD is 10 years, but you can buy and sell as you go. In other words, Schwab owns it. If you want in on it on Thursday, then you buy in today, you keep it for say 4 months, and then you want back out of it, you simply sell it back to Schwab, and Schwab simply collects the 3.8%. They literally don't care. They're offering it to you if you want it. If you don't want it, that's fine. They'll take the interest off of it. So a little different than if you're walking down into our bank today, looking at a 6-month CD where your money's locked away. So really attractive offering here for those that are in the market for such a thing. Call me and I can talk to you about how it might fit in your portfolio. All right. Secondly, recession is here, right? You heard it this morning. Fox News blurted it out. CNBC's taking a little bit of a softer take. But yeah, our GDP reported this morning fell 0.9% after falling in the second quarter, after falling 1.5%, I believe, probably down here in the first quarter. No, sorry, 1.6% decline in the first quarter. So officially in recession, right? That's all we've been talking about. That's what it takes is two consecutive quarters with negative GDP. And so only the U.S. government, I shouldn't say that, probably all governments. But so here, get this paragraph. I did not know this till I read it because I expected it to officially be a recession because you know what, we are officially in a recession. Nope. U.S. government has to declare it. Officially, the National Bureau of Economic Research officially declares recessions and expansions and likely won't make a judgment on the period in question for months, if not longer. What? That I don't like to call things out as just stupid, but that's pretty stupid, right? So we are in a recession by what everybody measures it by, but they may not call it a recession until they feel like it. Well, what criteria are they going to use other than just how they feel that day to determine it if we're not using this? So anyhow, it kind of goes down to, like a bear market is 20% off of recent highs, right? And everybody accepts that, and you just flip and move on. And it's a bear market until you hit new highs, and then it's back to a bull market. Everybody accepts that, and you move on. I think maybe that we need to be a little more accepting of the fact that we've met the widely accepted trigger for recession and move on. Now, what's the market doing with this recession news? Well, first of all, Chairman Powell, and we'll talk about that in a second, officially said yesterday that we're not in a recession, which is kind of funny because that's pretty bold when the thing that puts us into recession comes out the next morning. And I would say over 50% of people think that we are. So bold statement, but also factually true at the time, right? When he said it, we're not officially in a recession because the signal won't be here till tomorrow morning. Now that's you could laugh all you want at that, but I thought that was kind of funny. But what's the market doing? Well, yeah, like markets that are tough to predict, right? Basically flatlining. It was in the red earlier, it went green at the open. Now it's mixed. So yeah, I think we're going to be digesting this whole shrinking economy for 2 consecutive quarters thing for some time. Officially in my book in a recession, we'll wait until the National Bureau of so-and-so decides that we are, whenever they feel like doing that. All right, last thing is that 75 basis point rate hike. I want to talk to you about that. This is more of the financial planning thing. That was planned. The market celebrated it because it's that quest for certainty, right? The Fed is doing what it said it was going to do, which is nice, right? Because that you're like, oh, then that kind of bakes everything in and you move on. It's only when you get surprised in the market that the markets don't like it. So there was talk about potentially a 1% rate hike. Well, they chose not to do that, chose the 0.75%, and the market celebrated it pretty huge yesterday, especially the tech firms, with the NASDAQ being up over 4%. Did have an interesting comment yesterday, like, hey, when's the last time you saw that? Well, really, we haven't had moves like that until the whole March 2020 and April 2020 of COVID timeframe. We're actually, and I can't remember, I think it was March 20 something. Sorry, I don't remember the exact date. It was up 11% and change in the NASDAQ. Now, that doesn't tell the whole story by itself, right? Because that means, well, it was also down like 8% the next day, the day prior and the day after, right? So that's just kind of how things were at that time. And most people literally were not even looking because it was too painful. But so yes, big days like that do happen. If you are a go to cash and time your reentry, it's near impossible for you to predict what day it's going to move up like that, right? Because obviously most people weren't going to think that the day that we were going to raise interest rates by consecutive 75 basis points with a looming GDP number the next morning. Clearly, that's the day you would think we wouldn't be screaming higher 4%, and yet we do. Right. So again, it's that anticipate the anticipations of others. Markets bake things in months ahead of time. And, here we are with the big day and then holding strong the next day, or at least holding, I should say, maybe not holding strong. But from your financial planning aspect, what difference do these rate hikes mean in your personal life? There's 5 things. Credit cards, those tend to not move up a whole lot, but they can move up here. This gives them a reason to raise that rate from, an unbelievable 18% to 20 or something like that. So just keep an eye out for what's going on. You maybe get notified by your card. They are required to tell you by law. So they send you a little mailer, but most people just pitch those, right? Anyway, check it out. Your car loans. Yeah. If you're buying a car loan, let's see, I talked to somebody on Tuesday night. They got, I think, a 1.96%. It is what it is, right? So when you go to buy a car, you can take the financing. I commonly use like 4%. If you get 4% or lower, you can finance it if you want. If you can pay cash, pay cash. It's a depreciating asset, so you're not trying to lever into a car like you do with a home or an investment sort of thing. So just keep an eye on it. Another trick is to negotiate the price based on the fact that you're financing it. So you get a little bit better price because the company is going to make more on the financing and then just pay cash. So anyhow, if you got any questions, reach out there's some car buying tricks out there. Adjustable rate mortgages. If you're in these, I don't like them. You know that. But if you're in one, just realize it can move on up now. So it can adjust on you. So beware. Student loans, not too familiar with these, but I know that some of them are pegged to either the LIBOR or the SOFR or whatever. So we're on a freeze right now, but that's coming. Yeah, that drops in August. So expect those to go higher, and then any other variable rate loan like a home equity line of credit sort of thing. So just beware if you're paying a variable interest rate. Check in to see what you're paying, and then you may make some cash flow decisions, right? You may say, okay, well, I'm going to pay that off and not pay something else. So, just be wary that with the interest rates probably continuing to go higher, even though we may be at the peak raises. I think we might back down to a 50 basis point next meeting in September, but we shall see. But just keep an eye on things. So, all right, thank you everyone for your questions. Please submit new questions to me through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Steve Ankerstar, and we'll see you back here tomorrow. Bye.